A 42% drop in prices of new cars already. Even though there are now too many cars available, almost 30% more than 2 years ago, not enough people are interested to buy them. Naturally, when supply is more than demand, price drops. This might lead to an EV market crash soon. Big car companies like Ford, GM, and Tesla have promised to invest a whopping $616 billion in making more EVs by 2030. However, as you can see, this plan doesn't sit well with the current problems, so it's highly recommended not to buy EVs right now. We're not saying this, but experts and analysts are. Let's check out what more we can know about the impending EV market crash. Experts predict that the prices of EVs might drop by almost 50%. Even though many people like the ideas of EVs, some are still unsure because it can be expensive and may not go very far in a single charge, especially the cheaper models. In 2021, 86% of US buyers considered an EV, and by 2023, that number dropped to 67%. Only the rich people who can afford expensive things are still buying fancy EVs. The prices of used cars too dropped by 6.6% and have lost more than 20% of their value since mid-2022. Plus, there are concerns about UAW strikes that temporarily stopped car production. If the strikes continue for a long time, it could aggravate market problems, creating a bubble, and the moment the factories would resume mass production, a massive fall in price will start. However, according to Rebecca Roszewski, a research manager at Cox Automotive, even if there's a strike, it's not expected to quickly change the prices that consumers pay for cars. Roszewski revealed, after a tumultuous last few years in the automobile market, now we are seeing new vehicle pricing trends hold steady. She also added, dealers and automakers are feeling price pressure, and with high auto loan rates and growing inventory levels, new vehicle prices seem to have hit a ceiling. That means balance is finally being restored. As of August 31st, Kelley Blue Book reports a nearly $2,000 decrease in the average transaction price of new vehicles to $48,165, the largest drop in a decade. This shift indicates a market change, with demand lagging behind production, in contrast to a year ago, as per Cox Automotive analysts. Cox Automotive executive analyst Michelle Krebs also explained, "We call it the field of dreams moment. Automakers are building more, but not enough consumers have come to the field." In August, smaller cars and SUVs became cheaper, while fancier cars got a bit cheaper too. The average price for a fancy car is now $64,107, down more than 4% since the start of the year. EVs stay on dealership lots for a long time, about 90 to 100 days, while regular cars only stay for 52 days on average. But that's not all. There's a bigger problem too. China is secretly making plans that could hurt the EV industry in the US. We'll come to that point soon. Before that, we must take a look at Tesla, the only American car maker making a profit from EVs, which is also having trouble. They had to make their cars cheaper, with some prices dropping by 30% this year. Elon Musk, the Tesla CEO, recently said he's putting the plans for Gigafactory Mexico on the back burner. "I'm worried about the high interest rate environment that we're in," he said on Tesla's earnings conference call. "I just can't emphasize this enough, that the vast majority of people buying a car is about the monthly payment. If interest rates remain high, or if they even go higher, it's that much harder for people to buy a car." Ford also reduced its $15 billion plan for EV investments by $2 billion. Ford CEO Jim Farley, during the company's third-quarter earnings call, emphasized the difficulties in the EV market, stating, "It's been a challenging situation for sure. People are not ready to pay what we thought they would." Farley said that just having a great product is not enough anymore. Now, having competitive prices is really important. In September 2023, the average cost of a regular car in the US was about $48,000, but an EV would cost between $53,000 and $60,000. Now, in 2023, the prices of EVs have gone down a lot. The average cost is now $53,438, which is 20% less than the previous price of $66,390. Last year, Because a lot of people wanted EVs, the prices went really high, up to almost $75,000. But now, EVs are having a hard time keeping their value. Tesla lowered its prices by $13,000 in the first quarter, and many other companies followed suit. Ford also reduced the prices of its F-150 Lightning models. When used EVs were sold at a discount, not many people bought them, causing the value of used EVs to drop a lot due to having too many of them available. Companies in North America have promised to spend about $100 billion to make EVs for both luxury and regular buyers. But because of economic problems, it's getting harder to make these vehicles affordable. For example, the starting price for Ford's F-150 Lightning is about $5,000 more than its regular version, which costs less than $37,000. General Motors' Chevy Blazer EV also costs more, starting at $56,000 compared to the regular one at $37,000. But why are EVs so expensive? Mainly because of the costly batteries. The price of lithium, a key ingredient in EV batteries, have gone up a lot since 2020, making EVs even more expensive, especially when it's time to change the batteries. Even though the government put $7.5 billion into building more places to charge EVs, there are still problems, with more than 4,000 stations temporarily closed for repairs. Also, the places where you can charge your EV are not spread out evenly, with most of them in just a few states. People who were initially excited about their EVs are now trying to sell them, which means there will be more EVs for sale, further putting more pressure on prices. Research from Bloomberg NEF suggests it might take 3 more years for EV battery prices to be the same as regular car engines. Tesla has reduced its prices a lot, with the profit margin being the smallest in over 4 years at 16.3%. Meanwhile, some new cars, especially EVs in the US, are losing a lot of their value. Experts predicted there would be only a small drop in prices, around 10%, but it's turning out to be 4 or 5 times more than that. For example, the prices of EVs like the Tesla Model S, Kia EV6, and Ford Mustang Mach-E have fallen a lot in 2023. Ford's EV branch, Model E, is also not doing well. They lost $1.3 billion in the last 3 months and expect to lose $4.5 billion this year. Right now, they're selling EVs at a loss of almost $36,000 each. Sales of the Mustang Mach-E dropped a lot too, from 5,872 cars in September to just 2,732. This isn't just about Ford. Many new car models have become at least 30% cheaper in the last 10 months, but hybrid cars are doing better, with an 18.8% increase. Ford tried to compete by introducing a new flash trim for the F-150 Lightning, but it didn't help much. After they decided to halt production for the popular F-150 Lightning, which made up more than 70% of their EV sales, in a record-setting third quarter, Ford saw a downfall. Ford is cutting back on making EVs and delaying investments in them. They're pushing back plans for a new battery plant in Kentucky, which adds up to about $122 billion. General Motors is also dealing with similar issues. They're starting to make electric Chevy Silverado and GMC Sierra trucks a year later than they originally planned at a plant in Detroit. GM says they need to be careful with spending money and adapt to what people want in EVs. Mercedes-Benz also shares the same view with them, even though the US government wants half of all new cars sold to be electric by 2030. A recent survey shows that 47% of Americans probably won't buy an EV because of worries about charging and the expense. In the last year, fewer than 1 in 10 people buying cars chose electric ones. To worsen the matter, China took control of almost 80% of the supply chain for the batteries in EVs. In 2021, there was a global shortage of computer chips, and because China is a big supplier of these chips, so car makers invested a lot in getting supplies from China for their EVs. When these cars finally came out, people didn't like them, and sales dropped. To fix this, car brands have lowered their prices a lot, with the average price of an EV dropping by 13% in 2023 to about $33,500. If you're thinking of buying an EV, it might be a good idea to wait until the second quarter of 2024 because prices are expected to go down even more. But no one is sure when EVs will actually become affordable. Companies that make EVs are having a hard time figuring out how to make them cheap and still make a profit. You could think about getting a hybrid or a regular car to save money. So are you ready for a massive drop in EV prices? What are your thoughts on the biggest EV market crash of our lifetime? Share your insights in the comments below, and don't forget to hit that like button if you found this information valuable. Subscribe for more updates on the EV world. Thanks for watching.